All right, what's up, guys? This video will be quick and simple. All right, so this will be over low floats and promotions. So a low float just lets you know that the stock can, it can easily jump up or it can easily, have a sharp decline down. So a low float stock just lets you know that there isn't enough shares to go around. So just, just an increase in volume can make that stock jump a lot. So you can start seeing huge return percentages like you see on Yahoo Finance, the top gainers, or you can go in your broker and you can look at the top gainers. You might see some stocks up 400, 500, maybe even 900%. And you're like, how did that happen? Because the stock was a low float. Not, not just because you got all institutions buying the stock. It's because it's a low float and you have people buying and selling, and you have more people buying the stock, bidding it up, and there's not enough shares for them to buy. And, the stock tends to take off. And that's pretty much what a low float stock is. So you can, I don't think you can Google it, but in Yahoo Finance, there's a company profile. You can search the low float, or you can see the short interest, and you can make your judgment off that. So you can keep low float stocks in your watch list if you want, but these stocks are really volatile and they can take off really quick, and they can fall down really quick as well. So here's an example of a low float stock. So one low float would be Cone, and I think this one's OPTT. I think this was a low float. I'm not really sure on this one, but for this one, as you see, the price went to 5 and took off and went to 15 in just a matter of 24 hours. So what you're looking at here is the RSI is letting you know that the stock is oversold. Well, it doesn't go all the way below that oversold line, but it touches that oversold line. And when it touches that oversold line, as you see, it hit the low. Now, once it hit the low, it was able to take off. And once it was able to take off, you see the overbought levels. They were just spiking up. And then during the close, you start to see that oversold again. And then once you get into the oversold position, you can just ride that all the way up to overbought. And the overbought levels were just way, way too high. And it was able to reach $15. So I think $3, three to $4 of upside on overbought, riding the overbought levels. So the RSI and the daily moving average was a key factor in watching that. So I guess you could have watched the daily moving average instead of the RSI, or I guess you could have watched both. But the daily moving average is letting you know that this stock was, it was poised to go higher. So that's something to look at. Remember, guys, daily moving average and RSI is one great strategy to make, some quick dollars. Okay, and also, what can a stock promoter do for you? A stock promoter can grow your account easily if you just buy what they tell you to buy. But on some days, I wouldn't recommend buying because you start to see this, the stocks get shorted on certain days. And those certain days, I think you should watch out for them yourselves instead of me telling you. So I don't want to, give you guys all the answers, but make sure that you follow a promoter. You watch what day, the promotion turns negative or the promotion gets shorted. But sometimes these promotions, they get shorted on certain days. So be very, very careful. Like you should know what, for example, you should be like, okay, Thursday is always a green short. Thursdays is always a buy day. So I'm going to go ahead and buy because I know that my risk and reward is really high on the reward side, but less on the risk side. So that's something that you should pay attention to. Also pay attention to the times as well when people buy, and the times and volume will really help you out in understanding where the stock can go once it's promoted. Okay, and here's an example of me selling way too early. So the promotion alert price was 59 or 58%, 58 cents. I was able to get in right there. And I didn't know that the stock was going to take off so fast because it really did after it broke through the 70 cents resistance line. And after that, it took off. So, I was buying in the, 59 cents ish. And once it hit a high of 70 cents, it started to go back down, and I guess it was it was resting for the retest, and I guess I sold too early on this one. That really got me because it went up another, I think, 30%. The stock almost went up 50% just off that promotion. So when you watch these promoters, they can really grow your account. I was able to make a nice 12% on this. I think that was the average of, what the promoter set out. That was the average of people's gains, 12%. But when you watch the promotions, you have to look at the volume as well, because the volume starts to die out. Once you hit the peak, the volume died out just about. So pay attention to the spread as well. If something is telling you that that the ask price is 68 cents, but then the bid is 50 cents, I think you should be very careful of buying that stock, because that is a huge tick. These are huge ticks ups and down. So let's say I put $68 in, right? And the bid price is 58 cents. So I bought 100 shares, right? And let's say the stock starts to ping around 58 and 68 cents. So you're going to start to see $10 losses or $10 plus losses, because the spread is so huge. But you can't be scared. But if you want to be extra risky and play with these huge spread stocks, go ahead. I know the small floats are really risky and they have huge spreads. And if that's your kind of strategy, go ahead. But that's way too risky, because you can buy something for $1 and it'll be listed in the bid price for 90 cents. So it will make you look like you're taking a 10 cents loss, because the price is steady pinging around between 90 cents and $1. So unless it starts to close in and the spread gets really tight to where like it's a 99 cents and it's $1, I feel more comfortable buying that stock, because just in case it does ping around, you're just taking $1 loss, or you're just down $1 for that second, or for that moment in time. And when you look at the level twos, I want you to be paying attention to the ask price, because once the ask price starts to tick up and it starts to meet the bid price, that's when the stock is getting ready to run in. And don't be fooled by getting head faked out of the stock, because sometimes these stocks, they can spike up and then you're like, okay, you bought it to spike because you know why? It's gonna morning spike, and you could get squeezed out of that position, because people are already buying the stock up, and then they're like, okay, we've made our money, let's get out and let's leave these fools at the peak. And you'll be left there with a loss, because you were not timing this stock early. You're not timing the jump early. You were late to the jump. So when you see a stock up 400, 500%, why would you even play that? Like, your gain is going to be so small. You could have made 500%. You could have made 30%. I've never seen anybody make 500% before. But when you get in that stock and it's already up 500%, I mean, you're really limiting your upside, because the stock is up so much. So you buy in at 500%, right? It goes to 515%. Okay, you make 15%. But like I said, those huge spreads, they start to get you. So now 515% just turned to 480% that quickly, because the spread is so wide. So that's something that you should be watching out for. So the main two things I want you to watch out for, if you haven't opened an account, if you're just a rookie or you're just a beginner, I want you to watch out for the RSI, what you see at the bottom of the screen where it's red letters. Where the red letters are, you see those lines, and you see when the line turn red, that lets you know it's overbought. I want you to pay attention to those when you start looking at your stocks, and I want you to put in a daily moving average, so that way you can know when to trigger a buy or sell for you. So if you're not sure, you could just paper trade, because you don't want to use your real money. Make sure you paper trade this. You can buy when the price is oversold, and you can sell when the price is overbought. So guarantee you Monday morning, I'm going to look at the pre-market, pre-market movers, as you see on my left hand and bottom of the screen. Look at the pre-market movers, check which one is oversold. I'm going to buy it, and I'm going to sell it at the peak, and I'm going to show you guys what I did, because that is my strategy on Monday. I mean, Monday is kind of like a risky day. Sometimes I put my whole account in on Mondays, but now I'm starting to, take some risk off the table. But you have to get used to playing around with your account, because sometimes you're like, okay, I'm tired of making $50. Let me make $300 in one day. Let me make $200 in one day. Let me make 100. That's something you have to be comfortable with. Like if you're comfortable with taking a $20 loss, 20-cent loss, however much loss, that's okay, because you know what, you can always get it back. I took a loss playing one of those pharmaceuticals IPO, and I took a $20 loss. I made up for it because you know why? I'm disciplined and I don't force trades. So everybody says that you can be a disciplined trader. I don't force trades, or I listen to my rules 100% time. 100% time, traders do not listen to their rules. They don't buy into their own discipline. They're going against their rules. They're overbuying stuff. They're overselling stuff, and they start to take on losses. Sometimes, you can get lucky and catch a win here and there, but if you're going against your strategy, going against your goals, you're starting to, get out of whack, and the next trade you place might be a loss because you started to get out of rhythm and you started to get away from your strategy and your goals. So make sure you aren't forcing trades. You only have 3-day trades to play around with. Play with those 3-day trades on different days. Like me, I'm playing 1-day trade on Monday, 1-day trade on Tuesday, and 1-day trade on Thursday or Friday. You have to be disciplined. You have to know when to use your day trades. You got to know when to trade, when to say, okay, I know that Apple is up, but the reward side is very limited because it might make a 20-cent move, but my account isn't that big for me to, play around with 20-cent moves in Apple. But if I had a 20-cent move in, the stock that was promoted, okay, I'm game for it because I can grow my account exponentially. So that's something you have to watch out for. And I hope you guys are subscribing. And if you're new to this, please mention me. I mean, we can have arguments. We can have questions come to me on my Twitter and my Instagram page. I welcome it because I want to know what you guys think. I don't charge for trades. I don't charge to learn how to trade. I don't charge how to watch the videos. I don't charge for you guys to get in the chat room. But you have to help yourself learn this before you get in my chat room. It's not like, have you paid $20 before I can let you in the chat room? No. I want you to actually learn this information before you jump in the chat room, because 9 times out of 10, you're going to be asking questions on everything that we say. We're going to be throwing pics out there. You're going to be asking questions. You're going to be like, what is that? What do you mean? What is this? I want you to be able to watch these videos and take some time out and learn, take some notes, because this is your account. This is your money. We're already growing our money in our chat room. One guy made 75 in a couple minutes. We're already growing our accounts. So it's the matter if you want to grow your account the way we're growing our accounts. So that's something to think about. But I'll see you guys later. Take care.